back in 1993, when we were, I think, almost 30 years ago, when we started then, our aim was to end up the then century by the beginning of 2000 to be able to have a full double fleet. And that was, if you remember, a double hull fleet at the time, the new legislation following the OPA 90. We were able to accomplish this on a timely mode, and when we entered the New York Stock Exchange in March of 2002, we came with 24 double vessels. Well, now we're undergoing a very similar exercise. So what we would like to do is, by the end of this decade, by 2030, to have the vast majority, if not all, of our vessels of the future technology of energy carriers, which right now seems to be the dual fuel, which could be either the alternative fuel could be gas or ethanol going forward. And of course, hydrogen is in the way back of our mind, and our technical and environmental committees are working on designs like that together with our long-term shipyards. So we look at this initial 5 to 10 year contracts as a start with a very predominant and very experienced end user, the Equinor, to build those ships and start our process that we would like by 2030 to have a complete fleet. We are looking at returns. We look at it at the return on equity of those deals. So we look at them on the high to mid teens. I mean, our main always target is in excess of 15%. But when we're doing new high quality projects, we will do anything between 10 and 15%. Going forward, of course, we are looking at an inflationary environment. However, looking at a weak euro, I think this balances out this for us. As you know, the majority of our expenses are fellows are European, who we pay in euro, and having a weak euro and a stronger dollar will help balance the inflationary trends. So I do not foresee, other than the bunker expenses, in which we are hedging a significant part of them, an immediate negative effect, at least for the first 6 months. We have at least half of our fleet is already of the eco of the eco design, and our technical team and environmental committee is doing a lot to actually implement from January 23 the new legislation that will reduce the footprint even of our older ships and bring them to a much more environmentally friendly circumstances to be able to navigate way under the legislative tasks that we are facing. And by replacing our fleet, we will only do it together with end users, at least for the first part. After we have a dozen fleets of the dual fuel technology, a dozen vessels, and that will make us comfortable operating them, then we will be able to start building ships even without employment. So it's not so much the risk, the financial risk, is what we want also to take care of is the technical risk that we are together with big major oil companies are building the right ship for the right period and for the years to come. I think we will be returning to a significant profit in the first quarter, and if things continue the way they are today, in an even better profit for the first 6 months. And of course, we're still in the middle for the beginning of the second quarter, but things, rates, as you know, the rate, it's not a secret, are quite significant from the Aframaxes to the product carriers and the Suezmaxes all over regardless of the Russian crisis, regardless of Russian location rate, the whole market is reacting very positive. So we believe that this could be the game changer that you and I and the rest of the analysts will be talking, and the rest of our peer group, for the last 18 months.